Good morning, everyone. Welcome to forms class. Today, we are going over three specific forms. Also some processes on how to actually use transaction desk office clauses for extensions in case you're in a situation where maybe you're doing too many extensions and the seller's like, no, I'm not going to extend unless we release that earnest money. So I'm going to give you guys clause for that. So our two forms today is 22VV and the other two is 22Y and 22Y reporting. The 22VV is the insurance contingency. I've asked a ton of people and not a single person knew what the 22VV was. Which, makes sense because this form just doesn't come into play a ton, but it is out there. And we actually, which is hilarious, just last week, we ran into a situation in here where the buyers, they almost did not give insurance for the property. Yeah, so homeowners insurance was not gonna be, the first two companies denied them. They wouldn't do it. You guys know why? Why would an insurance company say, no, we're not? What could happen?
Too many claims.
Right there, too many claims. They actually had actually, we've had two situations, one just within like 2 weeks. Two situations, because I know someone else in here literally had one where it wasn't that they weren't gonna not cover them, but they told them that there was something on the clue report. The clue reports are it's like your Carfax, it's like a Carfax for a house. That's what the clue reports are, and that's what insurance companies utilize to look into the history of the properties to know what's going on with this house. Has there been any claims? And every single time you make a claim on your property, it goes on this report. The more claims on the report, the more likelihood that one, the insurance company may not even cover you. They won't cover you, or your premiums are actually going to be higher. So in this one particular case, the property had, kind of gross, but they had a death in the house and it wasn't found for several months, and the body actually decomposed and caused massive damage to the property. I mean, I think it was like 80 grand. So these kind of things happen. The other situation was, it was two things on this one. This one was bad. Arson. They had an arson claim, and then also had a flooding claim. So it had a bad water damage flood so the insurance place was like, no, we're not gonna do this house. Because it's either in a bad, and this one, I don't remember how much it was for the cost for that one, but the whole point is like, what happens, and the scary thing was, in that other situation, the client waived inspection. They waived verification period. They waived the Form 17, and they had non-refundable earnest money. And so then the first thing they're like, what are we gonna do? Can't get insurance. What do you guys do? What do you do in that situation? You gotta start making phone calls, calling anyone you can, right? Who's got, could get insurance. They finally found someone that they said they would, but it was higher premiums. How can you know that before you write up a house? Can you?
No.
You don't, do you?
Why can't you know? It is. I mean, this isn't the first time the issue of blue reports come up.
Oh yeah, no, it's not. I mean, I guess the only thing you really could do is have your buyer call their insurance, whoever they got their insurance through, and then, make contact with their agent and say, hey, I'm thinking of writing up this house. Can you look it up and see if it's okay for, anything on the clue report to see if there's, huh?
Well, just because it brings up the issue in California, home insurance agencies are fleeing the state.
No, they're fleeing the state.
Yeah, well, there's places where they've been just devastated by fires.
Oh, yeah, they're bankrupt.
Yeah, and so that's what I hear from, so I mean, so it becomes an issue with here in terms of, we're known for mudslides. So I just was, wondering where, because, that might happen.
Yeah, so it's just one of those things, like, you don't really, I mean. I knew this one broker in Olympia, every deal she wrote, she'd have that in there. And I asked her, I was like, wow, like I'm serious, like you're the only person I've ever seen write these. She's like, yeah, well, probably because I'm the only person you ever met who had a client who wanted to sue me. Because their insurance premiums were super duper high and they couldn't afford their house. Okay, so she's like, yeah, every single house I write up now, I include this. I don't even care. They gotta check it. There's a contingency. That way they can get out if it's way too high. I was like, okay, I can see your point.
Because like back in the day, it seemed like when I at first had this issue,
Mhm.
I can't remember what it was. They'd have a high bill report, they would qualify.
Yeah, totally.
So it seems like that would be something again to know beforehand.
Yeah, I mean, it's one of those things like, if you don't have this contingency, right? And you got a financing contingency. The financing, they're good, like, like a lender's not gonna write them a denial letter, they're probably gonna say, well, we can't loan on it because they can't get insurance on it. But I don't know how that will fly.
Oh, yeah, I mean, they wouldn't get insurance, it's just like, there are issues with, especially when. Flooding and water damage coming up, then you had the issue of mold. And that started happening, and some flu reports started reflecting, then you're paying higher premiums and something.
Oh,
Yeah, so.
and insurance is it's all getting up. I mean, you guys all know car insurance went way up this last year, like the beginning of the year, like.
But yeah, but that also raises an interesting question, because most, notes to be a trust, have a policy in there, to provide insurance, we'll get it for you.
Oh, yeah, so cost, yeah, that'll cost you though.
Well, I had one of the realtors I work with in Florida. He let the forced place insurance was cheaper than regular insurance.
Really?
Yeah, it's like let it lapse.
Wow.
So I don't know, you probably, maybe just on the service it seems cheaper, but I would think that you have to file a claim or something or whatever.
Yeah, who knows, like what that, yeah.
So what amendment does this in terms of the clue report?
All right, so, well, your clue report, obviously that's the online access that only insurance agents have access to.
Right.
That we don't, there's no public portal that you can
Well,
get
it
to.
just seems like for like practices, this kind of known for, be good practice that before you get started, say,
Yeah.
talk to.
That's why we're having the conversation, and that's exactly why we're going over the forms. All right, so let's share my screen. All right, our first one is the homeowners insurance addendum to purchase and sale agreement. 22VV. So use. Attach this addendum to the purchase and sale agreement when the sale is conditioned on buyer obtaining homeowners insurance, together with any other property insurance required by buyer's lender. Example, flood insurance. Hafner, do you guys do you have underwriting, or you have like your team
For
basically look that up, right?
Yeah, so when you do.
What's the process look like that?
Yeah, basically it's just a website that we go to, we use the third party company.
Mhm.
They have all the flood maps and everything else, so then you just gotta figure out where, they just literally.
Put in the address.
You plug in the address and it comes up like a fax to a sheet,
Yep.
and it said flood zone. X.
All right.
There's one of the flood zone, check, it's pretty easy. To see, and if you have to have flood insurance, then at that point you have to get flood insurance.
Isn't the same thing for earthquake insurance?
Earthquake is, I mean, our area is not a high earthquake area. That's a rider, yeah, that's an additional.
And if you get insurance for qualifying purposes for a loan, we don't count so we don't count the earthquake insurance. And if you get it afterwards, whatever, I mean, if you, that's why.
That's an optional one.
Yeah, and I'm like, hey, if we're running close on the ratio, right, to get someone approved, then he'll if you wanna do the earthquake, we'll do the earthquake after we close.
Yeah.
And that is a right around.
There you go. Assistance filling in the blanks, following numbers refer to the numbers to the, on the sample of the form in the manual. Date of the purchase and sale agreement, obviously insert the same date that is at the top of the first page of the purchase and sale agreement. Buyer, insert buyer's names, obviously seller's names, property address. Insurance contingency, insert the number of days that buyer will have to make application for homeowner's insurance. Note that if the buyer fails to make application within the designated period of time, the insurance contingency will be deemed waived. So. First things first, let's see, Gavin, you want to read this first section?
Notice to buyers concerning homeowners insurance. The availability and cost of homeowners insurance depends on a number of factors, including buyer's personal insurance, buyer's financial and credit history, the condition of the property, buyer's claim history, and the claims history for the property. At the time of application, most insurance companies will only issue a binder, which is a temporary commitment to provide insurance and not a guarantee that a policy will be issued. After issuing the binder, the insurance company will take additional time to make a final decision about issuing policy and the amount of the insurance premium. Accordingly, it is important for buyer to apply for insurance as early as possible.
So when's a good time? I mean, what does it cost? Does it cost for them to apply? Probably not. Will they pull their credit? Will they look at credit again?
I don't think so.
I mean, if it's a carrier that you're already with,
Let me do a soft pull.
they probably do a soft pull.
Yeah, because when you do credit checks at the end of loans,
Mhm.
at the end of the process, I never ever see the insurance.
Sure.
company. So it must be like a soft pull.
Yeah.
at the-
When's a good time? I mean. If you already know, I mean, if you're in multiple offer situation, you want to have this contingency in there. I mean, you're trying to avoid as many contingencies as possible. So I'm definitely not saying, oh yeah, include this in everything, but. If you know this is that important, we're gonna have to have a process in place to be able to tell our clients, like, when is the right time?
Well, it seems like the right time would be before you make the offer,
Yeah,
to have the buyer go talk to him so to mitigate for this house.
Yeah.
Because my expectation, we're gonna see more of insurance companies really waiting because what's going on with home.
yeah,
So, I would, for me, it's like, this is a great reminder. It's like, I forgot all about this. I needed to do this ever offer now.
that's what I mean. I mean, it's one of the things we don't think about. There's so many things that's involved in the transactions. It's,
Yeah, if somebody's suddenly in a house saying, I can't get a fire insurance, that's like, okay. Wait, my turn.
Yeah.
What is our errors and emissions insurance anyway?
we got good coverage for us.
But for mortgage purposes, I have someone get the insurance right away. Because we need that in order to close on the closing disclosure.
Yeah,
And without that, we can't send out the closing disclosure. And so I can't tell you how many times I forgot about it too. And you're like, oh crap, I forgot to tell them to get, you know what I mean? So they'll do it. It's part of my process at the very beginning, get insurance. So then it's all done.
Yeah.
But I don't know how you make, I mean, I just do it after the fact.
But for me, it's like, what you're bringing up, Eric, it's like, it's very valuable because it seems so random. You go into a house,
Mhm.
and they've had a lot of reports, between, like years ago when mold was an issue. I had an insurance agent complain about her mom had paid insurance all year, got canceled. She filed one water report and they canceled it. And so, so basically, this is just a good reminder. It's not like, probably not any of us, part of our buyer presentation, be like, this actually is an area of distinction because most agents don't know about the clue.
They don't have a clue about the clue report.
Yeah, big fun.
All right, so second part, let's see. Pick on my Zoom. Let's see. Let's see what we got on there. Esteban, can you unmute and read the homeowners insurance contingency section?
I would, but I'm driving.
Oh, don't do that.
Yeah.
Don't
I'll
do
read
that.
it. I can
All
go. I'll read it. Well, or Jonathan, doesn't matter.
Go ahead, you won, Alec.
Oh, no, you won. Yes, I'll read it. Which one, Eric?
Homeowners insurance contingency application.
Okay, line 12.
Mhm.
This agreement is conditioned upon buyer obtaining a binder for a standard policy of homeowner insurance, together with any other property insurance required by buyer's lender at annual premium not to exceed half of 1% of the purchase price, with a deductible not to exceed 1,000. Exclusive of all additional endorsements, declarations, and riders or Julie Earthquake, buyers shall timely make application. Then the contingency shall be deemed waived. The insurance contingency shall be give. Well, sorry, the line. Deemed satisfied, waived unless blank days, 15 days of not filled in. Other means of acceptance, buyer shall. Geez, sorry, my phone is acting weird. Gives notice of the inability to obtain a binder of the terms set forth above. If buyer gives such notice, then this agreement shall terminate and the earnest money shall be refunded to buyer.
Okay, so here's a breakdown of the contingency. They suggest to have within 5 days of mutual getting an application submitted by then. Kind of following the same lines of making your loan application by then too. I think it's okay, but like I said before, if you don't want to have the contingency, then you probably better tell the client, they probably better do that before, like at least send the property to their insurance person and have them check out the property to make sure that there's not a bunch of stuff on the record of the history.
And this is kind of, for me, is a red flag. You actually should be doing private property before you make any offer, because again, the insurance company might say too many things.
Yeah.
We're not gonna, you know.
Or they're gonna tell you, oh, great, this one's in a flood zone, you're gonna need flood insurance.
Right.
Oh, really? I mean, knowing that, now the buyer might even go, you mean it floods? What's that mean? Yeah, how come my broker didn't tell me? I'm gonna show you guys where, let's see, I'm gonna jump over to Northwest MLS real quick. Open up Matrix. Yes, I've read that. Let's go to new listings. Okay, and let's check, let's see if we see any listings from our office. Like to see who's listing. Nobody yet? Oh, come on. There's one. There we go. 1.2 mil. Whose is this? Jim's. Aha. Yeah, yours.
It is mine.
Yep. All right. So might. Yeah, sell, listing brokers might be, good idea to have the conversation and ask the client, ask the seller if they've ever made a claim on the property. That'd be a good thing to know. Okay, so getting over to your tabs here, right from the listings. Oh, why does it say flood map? You can't get to the flood map? No, that don't work. Can always go to. Why is tax? Uh-oh, is realist offline? Let's see what's going on here, because it's not showing in there. All right, search the address. Okay, and you can go up to your layers and go to flood zone. Select that. Okay, and then kind of zoom out on your map. So it says, here's your keys. Out of special flood hazard area. So it shows you the colors there.
Which map are you in? Is that King County?
This is just realist. Yep, using realist. And then your layers icon, you could select this little tab right here. You have flood zones. So that's one of the fastest ways to check. Also, it shows MLS area numbers too, which is very nice and helpful. You guys constantly look for those. So you can see different flood. Oh yeah, I guess it'll only go to there. Yeah, also MLS area. Now it goes. So that's the fastest way usually to check it using Realist. And normally you can get right from the listing, which is kind of weird. I don't know why. See if another property, yeah, no, it's. Normally you can get to there from there, but. All of those are offline for some weird reason. All right, let's get back to our form. Buyer signs, initials. You've got your contingency in place. 15 days is probably about right for that. You should be able to at least, the insurance company should be able to give you a full answer by then on what, what it's gonna cost. And if they're gonna actually be able to insure the property. All right, any questions about that one before we jump to our next section? No? Easy peasy. Clear as mud. All right, we are gonna get rid of this one. Let's jump to our next form. Oh, that is wrong one. Okay, we got 22Y, and I need to go back to 22Y recording. Regular 22Y. All right, so 22Y is the modification of closing date addendum. Use this form to change the closing date set forth in the agreement. Use this form with all of NWMLS's purchase and sale agreements. So regardless of what kind of purchase and sale agreement you're using, whether it's vacant land, multifamily, condo, whatever. This is what you're supposed to use to modify your closing date. Other dates. If the parties agree to change the closing date, they may also wish or need to change other dates and time periods set forth in the agreement. For example, buyer may like additional time to comply with buyer's financing or inspection contingency. On the other hand, if the parties move the closing date up, they may need to adjust some or all of their contingency deadlines accordingly. C is reminder of the agreement. Other than the changes expressly made in this form, all other terms and conditions of the agreement remain unchanged. So, assistance in filling in the blanks. The following numbers refer to the numbers on the sample of the form shown in the manual. Number 1 is the date of the purchase and sale agreement. Insert the same date that is the top of the first page of the purchase and sale agreement when it was written. Buyer's names, seller's names, property address, new closing date. So if you're changing the closing date, it's changing it whenever you're changing it. You're making it sooner, you're making it later for an extension, or closing early. This is what you're going to utilize. Don't use a Form 34. If you use a Form 34, you're kind of like, you're drafting, obviously. Most of the time, in forms class, you hear the phrase that there's a form for that. There's pretty much whatever you're looking for, or whatever you need. Typically, there is a form for what you're trying to do, more than likely. Same goes for the modification of closing date. This is what you should be using. So, modification of closing date, the parties hereby agree to modify the closing date set forth in the agreement to whatever date. You're going to put a date. Make sure you do the full date. May 8th, 2024. Write the whole thing out. What about on or before? You gonna write on or before in this? No, why not? We can close sooner.
What does that mean? But so many people fascinated do it.
Oh, I know. They do it all the damn time.
I've even had escrow people, like, hey, this, right for this sooner. I'm like, no, I'll write for this, and if we need to do it different, I'll write another one.
Yeah, yeah, even people in some escrow people even like say, oh yeah, you guys can write or sooner, or whatever. Go ahead. Yeah, writing or sooner. Again, when is sooner? You guys have all heard the story about the attorneys, that basically have lawsuits. There's lawsuits that they've gone through because of the or sooner phrase. A seller got into an agreement. This is a multi-million-dollar property. All of a sudden, like within the first week of the deal, it was only like days in, the seller found out some kind of news and kind of figured out, I don't want to sell anymore. So talked to her attorney, talked to her agent, and the agent's like, well, there's like, they got no contingencies. They're not going to go away. They want the house. There's multiple offers. And so the seller said, I'm going to call my old attorney friend. Had an attorney friend look at it. First thing he says is like, oh, this is easy. He goes, go drive down to escrow and tell them you're ready to close today. And she said, what? I said, I don't want to sell. He goes, yeah, I know. Do you think they're going to be able to close today? She goes, well, no, probably not. He goes, yeah, that's what they said they would do, or sooner. So go down to escrow and tell them that you're ready to sign right now. You're ready to close. You're closing today. So forced their hand. They're like, what are you talking about? We just got what? We're closing in 3.5 weeks. It's not even a full month. Like, what do you want? So no, you're in breach. You said you can close sooner. That's what the attorney told him to do, and freaking got her out of the deal. I mean, this is the thing, like, if you think about it, that's right. You can't tell some other person.
What day of the calendars are soon?
Yeah, what date is or sooner on the
I
calendar?
don't know what date is.
But that's such an invitation for a lawsuit.
Oh, it
Because
is.
that's just like the Windsor decision.
Yeah,
It's so nebulous that
Yeah.
suddenly, the attorneys are really in. And yet escrow honors it.
some of them will. A lot of them know it and understand it. They're like, no, we need an addendum. When they say we need an addendum to modify your closing date, this is what you're going to use. So please don't write or sooner. You can verbally explain that to the other party, right? Say, hey, I don't want to get, anybody in a lawsuit or have any issues with our deal, but we can close sooner, and we probably will be able to if it's okay, with the seller, with the situation. Let's keep this date for now, and then we will, by next week, we'll know if we'll be able to move it up a full week. Is that good? Or do it all in communication and email too, or something. Because I know why people write that in is because why? Why are brokers writing that in? Lazy? No?
Motivation for them to get the deal, maybe.
Yeah, they're trying to tell the other party like, hey, we probably can close sooner, but just in case, this is our firm date. It's a tactic to try to win, It's like brokers have gotten into this habit to writing this up. You don't even want to be in class when Annie Fitzsimmons goes over this. She rips people. Oh my goodness.
Yeah, but still, it's such a, it's not an absolute within, escrow companies that they're not gonna do it. I had Chicago Title do that. They never asked for, we had sooner and never sooner. They never came back, made the deal.
Did you guys close
Yeah,
sooner?
closed. It's when it closed about a week ago.
Did it close? How many days early did it close?
Closed about 2 days early.
2 days early. Yeah.
How about you just call the selling broker and say, hey, would you prefer a certain closing date?
Yeah. Yeah, how about that? Communication. Wow, that's a good concept.
Well, as a lender,
Justin.
it's kind of frustrating too. It's like when you get the contract, we're gonna close in 3 weeks, right?
Yeah.
And you get the phone, oh, can we close sooner? I'm like, well. I understand,
Yeah.
he's just gonna have a contract, you think, you know what I mean? Like,
Mhm.
Let me get my crystal ball out.
well, yeah, but it's like, you need to negotiate that. I mean, if you want to close sooner, just make it sooner.
Yeah, just make the date, pick the date, know what it is. It also causes other issues too, especially when, you know, the part, like the seller's living in the property still. That's when we tend to see these issues where, you know, they're like, oh, if you move up the closing date, now I gotta move sooner and I don't have a moving company and the property's vacant, you tend to have a little bit easier time, you know, with it, but even then, it's just, it's a little too risky to do. I just want you guys to think about that story about the lady who didn't want to sell. Changed her mind. And there are actual lawsuits with that specific thing. And it always seems like they accelerate the date much, much more than what they intended it to really be. Too. That's what's a lot of the lawsuits that Annie mentions and the ones even I've read about is that it tends to be that.
So are you saying we shouldn't accept offers on listings that put more soon?
I'm not gonna, I mean, that's one of those things, it's like, we see these type of errors and these little kind of things that come up in contracts. You know, sometimes it's not worth it to rock the boat to get mutual. You know, I don't want you guys missing on deals and pushing someone away unnecessarily. You know, get the deal, get the deal, get the deal. It's, you know, some of these things can iron themselves out, but it is a thing that you guys, you know, a thing of caution that you should look at. And especially sellers too. What if let's flip things around. What if the buyer says, I'm ready to close, seller, you gotta be out tomorrow on you. I'm like, wait a minute. What do you mean you can't do that? You accepted a contract that says sooner or sooner.
And I can see the attorney say.
You're in breach.
Sooner it is.
That's what I mean. Either party could argue in their favor, whatever their way they're trying to do it. So it's, you know.
No, I know, it's a problem.
Yeah, so maybe, I mean, like I said, if you're trying to convey, you know, the whole thing of we can get this deal done probably sooner, just communicate it. Pick up the phone, say, hey, I say, hey, I took Annie Fitzsimmons' class, you know, and she really put me through the ringer on writing these words down before on, you know, saying, you know, on closing or sooner. You know, so so I'm trying not to do that anymore. But I'm telling you that we probably can close sooner. This is our hard date, but we could, you know, probably close sooner than this if it's gonna be okay with your seller and everybody's, you know, good at moving the date up, you know, later on. Let's get mutual and then, you know, we could do this. So you kind of are doing the same thing. I mean, realistically. All right, other dates. So in addition, the parties hereby agreed to modify other dates set forth in the agreement as follows. This is for you changing other dates, other contingencies, like the manual said. If you needed to change the date, you know, for the, you know, the financing contingency. If 22A option A, if you're using the section for seller's notice of performance, maybe it's time to actually change that, you know, and say that the financing contingency will automatically terminate upon, you know, whatever date. Maybe make it the same day as the new closing date, whatever. But it's meant, this next section is for changing dates. Now, the last section here in the other is just a mini Form 34. Right? So insert any other necessary changes to the terms of the purchase and sale agreement. So this is where you would write your mini Form 34 of anything else you needed to do. Maybe it was a thing of, oh, seller's going to remove the curtains in the living room and remove those prior to closing. Maybe that was something that was missed in the earlier agreement. You had a verbal, you know, dialogue with the buyer and they're like, oh yeah, go ahead, take those ugly things in. We were gonna get rid of them, you know, if you left them anyway, so go ahead, you can keep them. You know, anything else that you need, you know, to happen or make happen. What happens though if you're the listing broker and you've already given the buyer a week extension and now they said they need another 10 days. What do you do in that situation, listing brokers?
Well, I mean. It depends.
Yes.
It depends on, you know, the multiple offers on the property, it depends, it's market.
Nope, no multiples. You're just, I mean,
I would extend it.
you would just extend it
Well,
again?
I'd want to know some information.
Who's had the most extensions on a deal ever? How many, what's the highest you think you've ever extended? How many times? 3? Anybody else? Anybody go higher? 3 times? 3 times have made it?
Oh, I've done more than that.
Yeah,
I mean,
Eric's
yeah,
done
it's
more than
because-
that.
Yeah, it's just like, that's the worst. Yeah, I mean, probably did, I think, 3, 4, something like that, yeah.
Mhm. Nobody else? Nobody else higher than 3? Zoom people? You guys are being quiet. Highest? 3 or 4? I know I've got that beat, because I've had some short sales that lasted, one of them.
Oh, I get it, yeah.
One of them was like,
3 years.
almost 2 years.
Yeah.
Yeah, almost 2 years in a deal.
Don't forget
Yeah, I
about
probably had at least 6 or 7 extensions. Finally got it done, though. My file was probably that thick. I'm not kidding. What can you do? What can you do to make sure that they close or they, or that they're gonna guaranteed not to just walk away at the last minute and say, oh, I guess we didn't qualify, so I'll get my earnest money and just waste all your time. What can you do?
it. Yeah, it depends on what's the reason for needing an extension.
Make the earnest money non-refundable.
Thank you. Yeah, let's hold their feet to the fire. Let's, making that earnest money non-refundable for another extension is probably the right decision to make once you've done one already, especially if you've done 2 already. I mean, it depends on the situation, like Jim said too, and Aaron was saying too, that it's like, it could be a small reason, you want to get behind what the reasoning is. So that means communication with the lender and of course the buyer broker. I mean, you better be in good communication with them on why this is needing an extension. When do you think you would know you might need an extension?
When loan docs are at escrow.
Oh yeah, our docs at house. How long does it take docs to get to escrow? Who knows?
What?
Yeah. Button send,
Yeah,
send it via email.
that's my joke. I say hit the F8 button. That
It's
sends
the
button.
F8 button on the
Hit it.
keyboard, that's it.
Yeah, just hit it.
I'm gonna give you guys a timeline that you need to make sure that you are keeping an eye on. If you're the listing broker, right, or even the buyer broker, you should just know this. When do buyers get their disclosures before docs go out?
You mean the closing disclosure?
3 days
Closing.
before. 3 days before.
3 days before close, right? They can. What's the earliest they could get them?
Well, I don't have to do the math. It's gotta be like day 2 of the application.
Yeah.
Yeah.
I mean, you're gonna close in 7 days.
Fast.
After you close.
Right. If you're closing in 7 days, I mean, it's 2 days in, you'd have to be able to get them.
Even if it's cash.
No. There is no disclosures if it's cash. Yeah. Basically 3 days before closing, realistically, I would just start calling 5
Yeah.
business days before your closing date. You should pretty much, when you're in a deal, you're in a contract, it's time for that conversation to the lender and say, have the closing disclosures gone out yet? How many days did the buyer get for the disclosure? And what days count and which days don't count?
3 days, Sundays don't count.
Huh?
holidays.
Holidays don't count either.
And holidays, my fault, yes. holidays.
Sundays and holidays.
So you can think about it on a Wednesday all day, you can think it on Thursday all day,
Yeah.
you can think it on Saturday all day. But I can't think about it on Sunday, and I can't think about it on,
Right,
it doesn't make any sense.
you can't.
It doesn't make.
But that's the rules. So Sundays and holidays don't count. So you really got it. That's why I'm saying probably 5 business days before closing, it's time to find out, did the closing disclosures go out? If you're the listing broker, you better be doing that. You better be doing that, because guess what? If you're talking to them and it's 5 business days before closing and they say, no, not yet. When is it? Like, you gotta, like, you're gonna be looking at you're gonna have your phone out, have your calendar app up, look at the whole month. Know which days are holidays and looking at the Sundays and start calculating, okay, lender, when are they going out? Oh, it's going out tomorrow. Okay, so you look at that and then you start counting on the calendar. Right? Look at the full month. Oh, they're going out tomorrow. So does that day count? It can, right?
You can, yes.
Is there a cutoff time? Aaron?
Midnight.
Midnight
So
of
if you
that
send
day.
a DocuSign,
Okay, good.
I know that I don't get this, if they're on the East Coast, you know what I mean, like if they're on the East Coast. And
Yeah.
here, I assume it's the day that where they need to sign, it might be here and you send, but nonetheless, it's by midnight.
Okay, so the next day, tomorrow's day 1. Friday's day 2, Saturday's day 3. So that's enough time to get the disclosure out. And for them to finish the process.
Well, you can only sign after the 3 days. So if you're gonna.
Oh, after.
Yeah, so if you're trying to close on Monday,
Yeah, let's say you're
Right.
closing Monday the 13th.
Monday the 13th, and the closing escrow goes out today, so
Yep.
Wednesday, Thursday, Friday, you're okay. If it goes out tomorrow, Thursday counts, Friday, Saturday, so you have to sign and fund the same day on Monday to close.
Okay, which you can do.
Some lenders will do it, some
Yeah.
won't,
Oh, that's true.
yeah. It's all about, and if you were in the legal lunch, wiring the money to escrow
Yeah.
by the lender, it's kind of a big deal. Yeah, so.
Yeah, so I mean, that's why I'm saying, like, it's critical. This is one of those timelines that's gonna be in every single deal that has financing, right? That the buyer is, if they're getting financing, they've gotta be signing their closing disclosures.
So the
Well,
beauty of,
lenders will
not
tell you.
to sound like an
Yeah, good one.
advertisement for
Yeah.
private end lending,
Yeah,
but. The beauty of what we do is that there's a list that goes out every day that says what is going out for closing disclosures and what's going out for loan documents.
oh, that's
Right.
cool.
So as long as we get it into our queue typically by like 2 o'clock to 3 o'clock. So if the CD's got to go out tomorrow,
Yep,
if it's in the queue to go out by 2 o'clock. I will get that email at the end of the day that says your the closing disclosure will be sent out tomorrow. They're on it, they've committed to doing that, so it's like, sometimes you call the lender like, I think we can do it, yeah, and it's big, there's a line to.
yeah,
But at least with this, I know if it's not on the list, then I need to have to go in and get an exception to get it done, but most of the time, it's really nice to know, and it'll also let me know the loan docs. Because if they sign the closing disclosure, then they can go ahead and send out, our company will send out the loan documents.
Mhm.
Because we don't want to send out the loan documents, why couldn't we send them out if they've already been signed, everything's approved? Don't wait the 3 days to send the loan documents to escrow, because it just takes more time.
yeah.
So if they sign it the same day, boom, then the loan docs will probably go out the next day.
That's good to know, so. You guys, 5 business days is when you're scheduling, and every deal you're doing that has financing. You know that you've gotta be calling and checking in, did the closing disclosures go out? And then you gotta look at your calendar and start figuring out where you're at in the day. When did they go out? Oh, they got them, great, so today's day 1. Tomorrow, day 2. Friday's day 3, they can sign it Saturday,
First Sunday.
or, whatever.
Yeah.
It's just, they can't have one of the days for disclosure be a Saturday, or a Sunday, or a holiday. They don't count them. So. Everyone's got it down, right? Especially listing brokers, because what is the worst thing? And I hear this all the time, is like, oh, tomorrow's closing. Yeah, tomorrow's closing, oh yeah, I guess docs aren't out yet. What do you mean? Okay, so docs aren't out yet, so tomorrow's your closing date. Did the disclosures go out? If you know the disclosures went out, then you're gonna know when the docs are going out. Because they can't send the docs unless the disclosures it's already been done. So that's them signing them, correct, Aaron?
Consummation signing loan
Yeah.
documents, yes, after the CD has been, after the 3 days.
Look, CD, once the CD signed and back,
No,
I mean,
it's
they-
signed it back, it's receipted back, we
Yep.
do it electronically.
then you guys,
Typically, the loan docs will go out the next day.
they'll go out the next day.
Well, that's our company, so I don't know other people, but
Yeah. So, I mean, that's the thing, like, if you know you're gonna have to modify a date. You probably would have known already that you're gonna need an extension before the actual day of closing. That's my whole point of all of that discussion is like, if you're watching things, you got your eye on the ball, you're probably gonna need an extension because the closing disclosures didn't even go out yet. Because now you got the calculation of how much time all that stuff takes. So if you're, day of closing and you're like, woo, yeah, today's closing, you're telling your seller, move on out. And then all of a sudden call escrow, hey, I haven't heard anything. Been kind of quiet. Just want to check what's going on. They're like, oh, we don't have docs yet. Well, wait a minute, today's closing, right? Well, yeah, I've been in communication with the lender and, they're waiting for the CD to go out.
Yeah.
You're not closing. You would have known this, right? And then when you go to your seller and they go, yeah, I guess, they didn't, we're not gonna close today. After all, see, if you're telling on the day of closing that you're not closing, that, you guys see that as the issue? Like you should have known that. If you would have been on top of things and been in communication with all the right parties, you would have already known this days ago. So that's the part, I'll never forget one of top producer just got busy, told me the story about how they had this a VIP that bought multiple properties with them. And they got egg on their face because that situation exactly happened to them. It's like, hey, it's closing, what's going on? I'm checking in. They're like, oh, well, we don't have docs yet. I've been talking with the lender and they said that, the closing disclosures haven't even gone out yet. So, yeah, we're gonna need an extension on this. So broker calls their seller and says, yeah, it looks like we're not closing today. And they're like, what do you mean we're not like, why? Like, where are we at in the process? Where are they at in the process? Oh, well, it sounds like they haven't got disclosures out. And like you didn't know, like you didn't call last. Yeah. Our broker was like,
Gotta be careful who you're working with, because some people. Yeah, I had one house I sold and it was somebody who planned on coming in there and then flipping it, fixing it up and then selling it. So they had, and they, had other houses they were doing, they were dependent on this going through at a certain time.
oh boy.
And then things went backwards.
Yeah.
Well, I also think the challenge would be like you just went over the closing date or sooner.
Mhm.
When you have that situation, it's hard to figure out what date you're gonna close. Right, so that's why I see a lot of it when you do these extensions. Everyone's just doing extended long enough because another it's bad, right? So they
Right.
go, let's just do this or sooner. And I'm like, okay. You know what I mean? Like it's hard to figure out what date you want to close if you don't know. You don't want to scare everyone off. You know what I mean?
Yeah, they're, like I said, those are terrible words.
Sometimes buyer brokers actually just try to shorten up the closing date to make it appealing, just to get the offer accepted.
Yeah.
But it's not realistic.
Yeah, we were talking about that, just like, it doesn't make sense. All right, I'm gonna show you guys in your transaction desk. When you are writing up, when you already have a deal put together and. Come on, transaction desk. Let's see, let me jump into one of mine real quick. Let's do an old one here. All right, so in your forms, you come back to your deal, right? Go in, let's add that 22Y. And we're gonna review the recording one. in a sec. Add the 22Y for modification of closing date. Okay, then open this up. Let's put in our date. And we're gonna close Monday the 13th now. And there's no other dates, but we do want to add this. Right, listing brokers, go add to clauses, office clauses. And down in here, we've got verbiage for earnest money, release for extension of closing. So select that, go up, hit OK, and it's gonna fill in. And let's say that, you know, maybe there's 10 grand in there and you're like, well, we want a guarantee of at least 5 for this next extension. This is gonna be the third one. We can say $5,000, the earnest money deposit shall be released to the seller immediately for extending the closing date. Immediately upon delivery of the earnest money, the released funds shall be the property of the seller and then shall become a non-refundable deposit, but will still be applicable towards the sale. In the event the sale does not close for any reason whatsoever, the released funds will not be returned to the buyer. Buyer is encouraged to work with their lender to ensure a timely close. Modification of closing date, parties hereby agree to modify. This is if you had to add it on a 34, but you're gonna go ahead and just remove number 4. So there you go. Now you got your date to extend, and now you got a clause in here to say, okay, if you're gonna, you know, if we're gonna give you one more extension, we want to guarantee, you know, that to make sure that you guys are gonna get it done. And if you say it's as good as, you know, a lot of times you phone go, oh yeah, we just need one more thing. You know, who's had an extension in here lately? Anybody? You had one? What was it? Why? Why did they need to extend?
Well, basically, they need to extend because they, something come up on the buyer's DOE. That suddenly, it was the last deal I just did, and suddenly there was some, they needed clarification. So they had to kind of go back, and I thought, it's another story about that, but they got it, it's like, they need 4 more days.
4 more days, but got it done. I mean, yeah, there could be a bunch of different reasons, whatever. I mean, you definitely want to find out what it is. Why? Why are we needing an extension? Right? Not following through with the contract, that means the party's in breach. One of the parties, right, is in breach for not following the contract. Well, now you've got some language in here that help kind of like hold their feet to the fire a little bit. Like, look, yeah, we'll give you another extension, but you know, we want to make sure that it gets done, because now this is costing us more time. This is costing it, maybe it's costing the seller more money. They didn't anticipate making another mortgage payment, right? That type of, this thing happens all the time.
Well, yeah, it's like, what I was worried about is you lock the loan in, and suddenly the rates have gone up. You ask for another extension, and the extension because you're a purchaser on the property you're buying.
Oh, it could. I mean, yeah, I mean, rate locks expire and stuff like that. Things happen. So this is available to you guys. Last thing here, we're just gonna look at the differences now for the last form to cover. Oh, did I close it? I didn't close it, did I? Oh yeah, here we go. So there is 2 22Y forms. One is the 22Y regular one that we just went over, and the other is the 22Y recording. This is a modification of closing definition for recording delays. General comments, use the Northwest MLS purchase and sale agreements define closing as the date on which all documents are recorded and the sale proceeds are available to seller. Several county recording offices cannot commit to recording closing documents the day received, even if the documents are received by the established deadlines. Thus, escrow may or may not
Eric, you're muted.
Oh, I have no idea what happened. That was very weird.
There you go. It works.
All right. You guys couldn't see the screen or anything again, huh?
Yes. Yeah, we can see it.
All right. All right, so the form provides in the event that through no fault of the parties, the county recording office fails to record the closing documents the day that the documents are submitted for recording, the parties agree to the following revised definition of closing. So you guys know in our actual, purchase and sale agreement boilerplate forms, there's the definition of recording, right? And we read it that it said that, what's it? It's the date on which all documents are recorded and the sales proceeds are available to the seller. So there's like what they say is what is closing. We actually had a deal in here where our seller said, hey, I don't have my money. And they go, what? Have you heard about this?
No, I'm sorry.
So, I can't remember whose deal it was, but they were like, yeah, the seller said, no, I'm not closing, but I don't have my proceeds. Closing, it says in our agreement that our closing day is when it's recorded in the county and I got my money. Is he right? Yeah. He's right. Well, I guess escrow didn't quite have things correct, getting his like wire and everything all set up, and so he's like, I don't have my money. So he was right, and he held them to it. He did not give up possession to the property until he got his money on Monday.
I have an agent, was her war story when I was presenting out there years ago, where her seller didn't get the money for a week, they stayed in the house.
Ooh,
That was
that's definitely something wrong there. That's rare, but hey, this stuff, it can happen. So now this is what they changed. So now this is what the new definition is with this addendum. Closing is the date on which, one, the closing documents are submitted to the county for recording. So now that they're submitted, okay, the sales proceeds are available to seller. And then two, and then three, the closing agent has received the irrevocable commitment of the title insurance company to deliver all title policies, and four, the closing agent is able to satisfy any other conditions required by instructions of any other party required for closing. So now they've completely amended it to make it, clear that, okay, we've released it to the county. They didn't record it yet because of the, timing. And they just get so backed up. They're just like, we're done. We can't have people working overtime every day, every night, because all these recordings could just pile up. And when do you think they mostly pile up? End of the month. Oh, I mean, that's just what happens. The final, like the last day, the last Friday of the month is the busiest day. Because everyone I don't know. I mean, that's just the day most people write contracts to close. Why do they do that? Why do we do that? Everybody? Nothing? Bueller? Huh?
less closing costs.
It's definitely less interest, up, for that closing.
It is, but then your payment's soon.
Yeah, but your payment is sooner.
Right, but that's just cash on hand, usually your payment. I only had one lender who basically said you make your payment and it goes forward. Most of your homeowner payments pay back. And so you still have a month to go get your payment on your paycheck.
But yeah, but if you close at the end of the month,
Right,
next month you have a payment.
right.
But I would think just in terms of cash flow purposes, if you pay the interest, it's cheaper than making a payment.
Yeah.
Right, so, but yeah, but you still gonna make a payment. Let's say your interim interest is 15 days. So you got 15 days and you're still paying at the beginning of the month.
Well, you pay
With cash
15,
up
so in
front.
other words, if you close May 15th, your first payment's not gonna be till July 1st.
Right.
So it's washes out at the end, just a matter of, if you use, the main thing is you're using all this money.
Yeah.
To buy down your house, to put the down payment, then if you have to do it, it gives you 15 extra days, you don't have to make a payment.
Yeah.
So it kind of makes it easier.
That's the majority of my deals have been, for all my years, with first time home buyers, they don't have the cash.
Yeah,
So usually we're setting up towards closer to the end of the month.
got it.
So I was told the answer to this question years ago was because when is rent due? No, what, when? Supposed to be on the first, right?
Yeah.
But the fifth, you better stop. You're late by the fifth. It's due by the first, right? When are payments due? For mortgages,
30 days after that.
the first.
Oh, you have until the 15th to, no, you have until the 15th to make the payment before you're late.
Yeah, but it comes up and it's due on the first. So most people try to close right before that day starts again, because it's it's the new beginning. So that's what I was told on why.
Well, that makes sense.
I don't know if it's, I mean, the exact reasons, but I just wanted to hear what anyone else would think
Or
about
it's
why
also
we
cheaper,
do
you're
that.
just not paying interest, right? So if you want to close early, you're gonna pay more
Mhm.
upfront.
Yeah.
Because of the interim interest that you're collecting.
Yeah.
So, when people say you want to close early, I'm like, well, does the buyer really want to close early? Because you're paying more money, right?
Yeah,
You have that.
bringing a little bit more money to the table. All right, county specific issues. This issue does not exist in all counties. If you are concerned that the county where the property is located could experience recording delays, you should consider including this addendum in the purchase and sale agreement. As always, if your clients have questions about this issue that you are unable to answer, you should refer them to an attorney. How to fill in the blanks, you got the date of the purchase and sale agreement, buyer's name, seller's name, property address, initial and date. If you hear this situation happening where escrow tells you, hey, we've released record, and it's at the very end of the day, it's like 5:30, 6 o'clock or something. They're like, hey, we released, but we don't have recording numbers yet. If you hear those words, you need this addendum. This is where you'll need the 22Y recording, because if you don't modify the definition of closing, does the buyer really have rights to keys that Friday night at 9 p.m.? They don't. They're gonna be sitting there in their moving truck and they're like waiting, they're like, woo, we got the house, we're moving in, you can't believe it, just waiting for the time to tick down, and you're like, hey, today's closing, escrow says we're closed, but the county doesn't have the recording numbers yet. I guess the seller's getting his money. Seller's got his money, but we're not really closed. So remember all those 5 conditions they changed, or 4 conditions they changed for the definition. I mean, it's a big difference. Do not, if you guys have a deal and it's you're in this situation where escrow goes, yeah, we're closed, but we don't have the recording numbers. I mean, that's a dangerous thing. I will tell you, there was a story about in 2005 or 6. It was right after I got my managing broker's license. Yeah, well, it had to have been about 2000, either 2005 or 2006. In Sunrise, this happened in Puyallup and Sunrise. I think it was in the Rim. So nice estate homes. It's like Friday, is like the 3rd of July. And they say, oh, hey, we're closed. And they didn't get recording numbers. It was one of these things, there was a glitch in the county and they didn't get the recording, it didn't work, or something. And they basically, employees are like, I'm out, I'm done, whatever, turn off the machine. Didn't record. 4th of July, house burns down. Burns to the ground. And then the buyers are like, seller, your house burned down. The seller's like, not my house, that's your house. So we're sorry that happened, but It's not, it's, I mean, it's your house, sorry, your home burned down. No, your home burned down. Well, it didn't record. I don't even own the house. It was a freaking huge mess, huge lawsuit. I mean, who's right? Whose house is it?
The seller's house did.
Yeah, it didn't record.
It didn't record.
You didn't amend the contract or the language required by it.
Yeah,
Yeah, it's crazy.
It happens there.
dude, these things happen. Crazy things have happened. I've heard of another one where a mudslide, you were talking about that earlier. Same thing, some other issue of, it was either occupancy happened, I think, before and they didn't close on it and the buyers like were moving in and then they're like, well, we're out and we're not closing. They're like, yeah, you are. We let you move in. They're like, no, we didn't even finish moving in. And the house is like, they evacuated the area and they're like, nope, you can't even occupy the house now. Well, sorry about your home, seller. We're out.
Most goofy things happen when you first move into a house because you don't know the house.
Yeah.
Water leaks.
Oh,
Turning
man.
on furnaces. weird
Oh,
stuff like
God.
that. Like, yeah, somebody's like. what the-
Turned off the,
Yeah.
turned off the oh, the kids must have turned on the gas pilot.
Yeah.
Turned on the pilot, or I think that's what they said happened in that house, that someone turned on the gas stove for the 4th of July one, the one that burned down. But things can happen and it's just that we've got forms to handle these kind of situations. You just got to know about them in order to use it, when it's necessary.
So the clauses you've given us are all in the back of this addendum in the multiple, is that what you're saying?
The clauses,
Well, you said basically, like when you were in there, like whatever they call.
oh, the modification,
clauses.
no, this is here. This is in the boilerplate language of the form. There,
Right.
this is the modification of the closing date definition.
Right,
So if basically the title insurance policies is basically committed and it's done, it's irrevocable, right, by title. They've sent it to the county for the recording, so it's been released. They just don't have the recording numbers. And seller has their funds. Proceeds are available to the seller. And the closing agent is able to satisfy if there's any other conditions. If it's done, to them, it's done. But your original agreement does not have those other other 3 items. So this is a complete modification of the definition of when is closing. When does closing happen? So if you're in that situation, and we've had these are still coming up. This is still, I literally just like 3 weeks ago, we had to use one of these. So it's something that you probably don't, you don't need to have this in the deal from the get-go, but just know that even if your deal's smooth as glass, you're closing on time on the closing date. If all of a sudden you're in the situation where escrow tells you those words, hey, we've released to record, but we don't have recording numbers. It looks like we probably won't get them till Monday. But you guys are good because there's no other dates we need to modify or any other agreements. Sellers got their funds and we've issued, your title insurance policy. So to us, it's closed. You hear those words, you need this addendum. Otherwise, it really isn't. Escrow could say these words, and that's exactly what happened in the situation. The escrow told our broker this, and I'm like, oh no, you need, because they're like, do we give keys? What do we do? It was our seller. Well, our seller's getting their money. They got their money. Do I just give them the keys? It's not recorded yet. It's not recorded yet. So you better add this form and then you are okay. Then it is still okay.
how could the seller have his money if it's not recorded?
Escrows they've got all the stuff ready to go. They got the check cut. Yeah, the funds are already there. Funds are there. It's a matter of them like separating, dispersing them from their trust accounts. Even if it's wired or whatever, they're like, yep, seller's got their money, the wire's out. Like, we're done. Are you?
I've had it before where they record in the wrong count. That's really like it's up north, right?
What?
So they were, I think they were. in
Like to Snohomish to
They were in
King?
Snohomish to King, and the escrow company's in Snohomish.
Oh,
And they
no,
recorded Snohomish. It was the agent's first deal.
no.
Buyer's the first home buyer, right?
Oh,
So it's like they're recording like, well, not now. I think, I wanna say it was like on a Friday, it was something like that. And I'm like, dude, record with
the
the
fuck
phone
did
county?
they do that?
Like, yeah, well, okay. So I don't know what they did. I think they maybe let them, I don't know. It's a bit,
You have to unrecord it.
well, they couldn't record it because they sent everything in. This is before they did.
They
like,
probably received it.
Kicked it back.
yeah, they kicked them out. Well, yeah. It's after the second run, you're done.
Oh, no. Yeah. All right, you guys, that is forms class for today. Hopefully I opened your eyes on a couple of forms that you may or may not have known about. So,
Thank you, Rick.
yep, you're welcome. Thanks, guys. We'll see you on the next one. Take care.